Hi everyone, this is Thanuja from Commerce UG. Today we are going to learn very interesting topic from financial accounting as well as management accounting, which is called as ratio analysis. So in this video you will be knowing what is the purpose of doing ratio analysis in connection with your financial statements. So ratio is basically a simple relationship between different quantities, and this can be utilized when we are comparing two different quantities, and it will be showing a simple mathematical relationship between the values so that you can connect the values and can easily identify the relationship between these two values. Say for example, if I have a box full of chocolates, different types of chocolates, I can make a count of each category of chocolates and I can form a ratio which will tell how many chocolates in each category. So here I have an example. I'm going to make the ratio of two colors. My boxes are filled with blue as well as yellow, and I'm going to make the ratio of blue and yellow. So in the first example, you could see 3 boxes are filled with blue color and 1 is filled with yellow color. So the ratio will be formed as 3:1. So when a person looking into this, you can easily identify how many are in blue and how many are in yellow. So when we express the ratios in finance or in mathematics, you will always use the simplified form, or the simplification of ratios are very important. So I have the second figure which is highlighted here, where I'm going to show the ratio of blue as well as yellow. So the box is filled with blue. When I'm counting, 6 boxes are filled with blue colors and 2 boxes are filled with yellow colors. So I can say my ratio is 6:2 here, and when I'm coming to the simplification of ratios, it becomes 3:1. So this is the basic method how you are going to frame the ratios, and now we are going to see when it comes to the commerce stream how it is applicable and what is a real ratio analysis. So in commerce we have different types of financial statements. Say for example, balance sheet will be there, income statement or the profit and loss account will be there, which will give you different types of data, and you can analyze it and identify what is the profitability of a company or how well the company is utilizing its assets, all these things. But when you're looking into the financial statements, it looks like raw data. So when we want to make some kind of conclusion or analysis, we have to convert this raw data into different forms. For that we are using variety of tools. In that, one important tool is ratio analysis. So in the earlier example I have showed you like how the ratio will express different colors. Just like that, it will connect two values. Say for example, it can connect your net profit to the sales, or it can connect your expenses to the profit. In that way you can easily identify the information by looking into the raw data like financial statements and profit and loss account. And in accounting we will be using different types of ratios, and each ratio will give you different answers in different forms. Like I was showing you, like the ratio will be, normally we are expressing like a fraction, so that you will be expressing like 1:2 or 4:8, like that you will be expressing the ratios. But it is not like a fraction in all ways. Like depending on what type of equation you are applying, based on that the ratio will be changing. So we are going to see what are the different expressions of ratios, or how a person can express the ratios when he or she is using different types of equations. So we have different categories in this. The first one is pure ratio. Pure ratio is the simplest form of a ratio. That means when I'm doing the calculation, my answer is coming like 1:2. So I could say in a box, like I have blue as well as yellow colors, 1:2 is showing, means one box is, or one column is expressing blue and 2 columns are expressing yellow colors. So this is the normal form of ratio. And the second one is percentage. This can be utilized in some ratios, like wherein I'm using a net profit relationship towards the sales. So when I'm applying the NP ratio, net profit ratio, or the GP ratio, gross profit ratio, my answer will be always coming as a percentage. So I could also say ratio can be expressed in terms of percentage as well as pure. Then the next one is like sometimes we will get the answers in times, like how many times you are going to repeat this activity. Okay, so if your answer is coming in times, or your equation is leading the answer which can be expressed in terms of times, that is also falling under this financial ratio. The most common thing of the ratio analysis is fraction. Most of the times we will be getting the answers in fraction, like 1/4 I have given. Like this can be applied in your ratios like current ratio, quick ratio, or net profit ratio. All these cases you will be getting the answers as fraction. And the next is like simply one numerical value with decimal you are getting. When you are calculating your EPS or earnings per share, you are getting the answer as, say for example, I put 2.64, and this is just a numerical value. This is also falling under the category of ratio. Some answers will be giving you like 43 days, 90 days, 60 days, like that. That means, say for example, how many days it takes you to collect the money from your customer, or how many days your supplier has given to settle your trade amount. So all these will be expressed in terms of days. So these ratios will be expressed in terms of days. So here we are explaining that the ratios are not always in fraction. It can be in different forms like percentage or times or numerical value, or it can be in days also. So this is depending on what type of equation you are applying, or based on your scenario you will be getting different types of ratios. Now we are going to see one important thing. Why does ratio analysis is getting so much importance in your financial statement, or when you are going to see the performance of a company? What does it tells you actually? So we all know that when we are looking into the financial statements like balance sheet or the income statement, as it is providing the raw data, we cannot come to a conclusion by looking into it. But when we do an analysis like ratio analysis, it will give you a figure which will connect different values and the relationship between different values. So we could say mostly the liquidity position, which can be easily identified by using ratios, and we have a set of ratios called liquidity ratios. So the concept of liquidity is very common in finance. All accounting students will be knowing it. It is nothing but showing the ability to convert your assets into cash. So we could say the ratio analysis will tell you how easily an asset can be converted into cash. Like when you look into the financial statements, we have different types of assets like fixed assets and current assets. So among these current assets, we will be easily converting into cash. So the liquidity position or the convertibility position of a company can be easily identified by applying liquidity ratios. Another kind of benefit what we are getting is profitability. So by looking into the ratios, we can also identify the profitability, or we could say the financial performance of a company. How well the company is doing its business for past 5 years or the current year. What is the scenario? And you can also do a comparison of your company's financial performance with other companies, or your company's current year with previous year. All this can be done. So here we will be using some profitability ratios, which is mainly targeting your net profit as well as your gross profit, and it will also show you the operating profit results also, which we will discuss in detail in the next video. Then comes the efficiency of a company. Of course, the efficiency of a company is related to the efficiency of the management. So this ratio is also telling about how efficiently the management can utilize the assets of a company, or how efficiently they can convert these assets into income. Okay, so the ratios will also help you to identify how well the company is managed and how nicely they are generating income by utilizing its assets. And As we all know, we can do different types of comparison. It can be related to your gross profit or the net profit, or different types of assets which is listed in the balance sheet, or different types of like debts or the liabilities or the equity investment which is expressed in your financial statements. By looking into this, we can connect the values and we can identify the financial performance or any other connectivity of different values which is expressed in your ratio. So hope you got a basic idea about ratio analysis. So in the next video we will see what are the different types of ratios. Thank you for listening.